Welcome back to the channel, guys. My name is Gordon. We are back with another video. Today we're talking about, are we in a bear market or are we going to see new highs for Bitcoin in 2026? As always, if you enjoy the content, please make sure to smash that thumbs up button below. We're on the way to our first 100k subscribers, so make sure to subscribe and grab your free copy of The Rise of Bitcoin in the description. Grab it down below and let's talk about Bitcoin. Looking at the Bitcoin chart first and foremost, it's pretty clear it's been a rough few weeks in the markets, especially since these highs at the beginning of October for Bitcoin at $126,000. Since then, we've had a very sharp drop off in terms of price, and we're currently sitting just around that $90,000 level. Now, whatever about what's happening here in the short term, what I want to talk about is the bigger picture, the macro picture. What is the setup looking like here for the next 12 to 24 months? Because I do still think we could see Bitcoin putting in new highs in 2026. And a lot of the reason for that is because we didn't or haven't seen a true blow off top in the market. And with some of the macro conditions, rate cuts coming more in the end of this year and as we move into 2026, Jerome Powell being replaced in the Fed by spring of next year, the midterms happening in the United States, and the Republican Party wanting to have, running the economy hot essentially, and us seeing potential stimulus checks coming. Trump's been talking about it. There's so many macro factors that I still think could be leading us towards having a strong year in 2026 for risk on assets just like Bitcoin. Now, I'm not under any illusions. If we jump out to the weekly chart, we can look at some of the simple and exponential moving averages, and we clearly lost that 50-week exponential moving average back here in the middle of November. And that break below here has historically been a very strong signal that we are moving into more of a bearish market. You can see when we lost that level all the way back here in the previous cycle, and we got a further close to the downside, we didn't manage to really recover substantially above it. Yes, we had 1 or 2 weeks getting back above it here in March of 2022, but we dipped further down into the bear market before coming to these lows around $15,000, $16,000 for Bitcoin. Now, we have been finding support at the 100-week exponential moving average here for the past 3 weeks. We've seen a bounce at that level, even though price action came down to around $80,000. And I've drawn in this channel here in blue on the chart, so you can kind of see how price action has been playing out here. Every time we come close to the bottom of this channel, we run up in price, we come back down, we hit it, we come up to the top of the channel, we come back down. In this period in April, we didn't quite come all the way to the bottom. Then we ran up to the top of the channel again before coming down towards the bottom. So is this another channel that's going to continue to hold? If we get a bounce and consolidation for Bitcoin to build a base here to start moving higher, then we could see prices move back towards the top of this channel. Again, you could argue that there's a bit of a head and shoulders forming here on the Bitcoin chart, and maybe we will run back up above $100,000 before coming lower into a bear market around that $70,000 level. Now, again, we could see that play out. And the way that I'm looking at it is, worst case scenario, maybe we are in a bear market. I think the 4-year structure for Bitcoin has definitely changed, and I think we're seeing global liquidity and macro conditions, governments looking to refinance debts around the world, especially the United States, and Trump looking to get those rates down. Why am I saying that? Well, I think that could mean that we see more stimulus, more rate cuts coming in 2026. But ultimately, if we see prices coming lower and we don't see the effects of that, then 126 may actually have been the highs of this cycle. Let's take that as the base case, just as an example. Worst case scenario, I do think if that was the peak, we're already a couple months into a bear market. If October, the first week of October, and these highs was the peak, we're already into almost the middle of December, and we're already 2 months into a bear market. And so you can think about that from a worst case scenario perspective, because these bear markets in crypto have historically lasted 8 to 12 months on average. And so by the time you find the peak to the bottom, you're looking here at November 21 to this bottom around October of 22. That's an 11-month period. And so if we are actually in a bear market and 126 was the peak, maybe this drawdown will continue. I think we could come down to retest this 70K area. I don't think we're going to be coming into the 50s or even into the low 60s. That's just my opinion. But if we are in a bear market, worst case scenario, I'm thinking that, okay, maybe we have to ride this for another 8 to 10 months. And we are already, 15 to 25% through the bear market. If you want to put, glass half full outlook on things, we're already 15 to 25% through a bear market if these highs in the beginning of October were actually indeed the highs of the cycle. Now, that is not actually my base case. If I think that we're getting more rate cuts, and if I think the stimulus that's coming in 2026 is going to play out, I do think we will see fresh all-time highs for Bitcoin in 2026. But it's always good to look at the other side of the equation. And if I'm honestly thinking about that worst case scenario, yes, we could have a further drawdown, but I think we could be already 15 to 25% through that bear market, even if the 126 area was the peak. Let's look at these. Let's look at these statistics on the rate cuts, because we are expected to get another rate cut here in December in about 4 days' time from the point at which I'm recording this video. We're at an 86% chance of a rate cut. And by the time we get to the middle of next year, we're looking at something like a 40% chance plus that we're getting at least 3 or more rate cuts by the middle of next year. So that's what we're looking like here with the outlook going into 2026. And I think you will see capital flowing into risk on assets if we see rates coming down by a further 75 to 100 basis points over the next 6 to 8 months. Again, zooming out and looking at the big picture here, guys, in my opinion, there's just no way this entire space is going away. And these buying opportunities with Bitcoin back in the 80,000s is a phenomenal buy the dip opportunity. I know it can be difficult to view the scenario in that manner, but you look at the Bitcoin power law, just as a quick example. We didn't move into irrational exuberance with the price of Bitcoin going to the upper band of this power law during this cycle, at least not yet. I do think that could happen as we move into 2026. Even just projecting out 7 to 8 years. By the time we get to 2032, the fair value price for Bitcoin based on the power law that it has followed since inception is $1 million. That's Bitcoin getting to $1 million by the middle of 2032. And that's without a blow off top. That is the fair value based on the green line here. So again, this is a hedge. This is, in my opinion, more of a risk not to have exposure to Bitcoin and crypto than actually having exposure to it. This is the world we're moving into. BlackRock, Larry Fink, tokenization of everything. BlackRock being the largest Bitcoin ETF now, almost 2 years of running that ETF. The BlackRock Bitcoin ETF is now literally BlackRock's top source of revenue. They are generating more revenue with the Bitcoin ETF than any other source of revenue, and it's only about 20 months old. That is phenomenal performance in less than a 24-month period, and BlackRock are clearly leading the charge here with institutional adoption, driving capital into Bitcoin, continuing to amplify its reach, and that's only going to compound and continue. Even the rainbow chart we're looking at, I know this is an OG chart, but you're looking at Bitcoin's price never even getting out of this still cheap area during this cycle, according to the rainbow chart. And again, you can make different arguments for and against why this is happening: price suppression, ETFs, fear, uncertainty, and doubt. But ultimately, we haven't seen Bitcoin get into hugely overbought territory during this cycle, according to everything that's been happening here over the past few months. And so if I jump back over here to the charts very, very quickly, and I bring up Bitcoin, let's bring up the other chart here specifically from Bitstamp, bringing up the RSI here. It's interesting to see the actual performance of Bitcoin over the past few cycles, because like I said, we haven't got into overbought territory. Looking at this chart on the monthly, you can see here this overbought territory we got into during the peak of all these other cycles has not even been remotely revisited during the past couple of years. And if we draw a very simple trend line here, going from these peaks down, we just didn't get up to these levels. And so I do think there's scope for that to happen in 2026 if the stars align, if we see those rate cuts coming, if we see stimulus checks, if we see quantitative easing really kicking in. I do think the knock-on effect and the downstream effect is more capital flowing into risk on assets. Finally, I want to touch on fear and greed, because again, this period that we're in right now with fear down at these levels for such a sustained period of time, we haven't seen this for multiple years. We haven't seen the fear and greed index down between 12 and 20 for such an extended period of time, really since the lows of the previous cycle back in 2022. Now, this particular chart on CoinMarketCap does not go back that far, but I can tell you we have not seen this amount of fear in the markets since 2022. And so that's why I'm treating this as a buy the dip opportunity. Even though this is a very basic indicator, historically it has proved very, very accurate. If you look back here, back to the beginning of 2024, when we had that run up in Q1, we were overextended with extreme greed. That was a great time to take profits and DCA out some profits, wait until we dipped back down here into August, September of 2024, and then buy the dip when people are actually in fear and ride it up again until we get into extreme greed. So these bottoms here, again, at that first week in April 2025, this was the bottom and the turning point. Trump came out and said he's removing the tariffs, and you saw the market shoot up here. And so, again, using and treating the fear and greed index as a very simple indicator to buy that dip. Hopefully, you've been able to do that here over the past couple of weeks, because the dynamics of fear and greed and human psychology and emotions mean we simply can't stay in fear for all that long. You have to have a certain amount of fear, yes, until the market regains confidence, capital starts flowing back in, people start buying the dip, and those dip buyers continue to push the price back up, moving things into neutral territory, and then eventually back into greed. And so hopefully you have been able to ride the storm here over the past few weeks, buy this dip. It's been a very painful few weeks, but if you've treated it like a buy the dip opportunity, you're setting yourself up for success here in the medium to long term, in my opinion. And we just saw on that power law, Bitcoin getting to $1 million by 2032. We're about to enter 2026. And so that is literally 6 to 7 years away. And you're looking at more than a 10x in the price in terms of where we're at today, below $90,000, guys. Remember the big picture, zoom out, don't get shaken out of your bags. This industry, DeFi, everything that blockchain and cryptocurrency enables is only going to grow. And anyone who tells you otherwise is ultimately trying to steal your bags. So don't get shaken out. Keep the strength. That is my update. I just wanted to voice that because I see a lot of fear, a lot of people getting shaken out, uncertainty in the markets. But if you can hold strong here, defend your bags, you will be in a better place 12 to 24 months from here. That is it for today's video, guys. If you got any value out of that market update, please drop a thumbs up on the video right under my finger. Take 3 seconds right now, smash that thumbs up button. Make sure to subscribe. We're on the road to 100,000 followers. Grab your copy of The Rise of Bitcoin in the description, and I'll catch you in the next one.